Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, June 24, 2015. This is a daily chart, it's a 60-minute chart of the SPY. And so let's just review what happened today in terms of how the market traded, and then we'll talk about what to expect for tomorrow and beyond. So here's the story. So the market... let's see, we opened up here, and the market came back to test roughly the 211.95 area, we'll call it 212, and we failed. Okay, so as we failed, the next level was 211.22, and you can see how these levels work just like clockwork. It's pretty unbelievable. So the market, in fact, let's go over to the 10-minute chart. You can even see it more dramatically. So here we are. We come back in to test the 211.95, we pierce above it, and now we fail. So now we come back in all the way down into the 211.22 that we had in here, this purple line, and we beat on it for a while, consolidated for about 1, 2, 3, 4, maybe 4.5 candles, so half an hour, let's call it, and then we failed there. Tried to retest it, couldn't do it. Then we came into the lower trend line here, 210.57, and we tested that, and it repelled, and so the market was bounced off that level, and we went right into the 20-period moving average, could not close above the 20-period moving average, and what happened? Failed into it. And then we pierced below it at the close. Now, that's important. And what's interesting is I'm going to go back to the hourly chart, and the reason that's important is because now we have to look to the next level. And remember the other day I said most likely we're going to get another down day this week or some downside. I don't know exactly what I said, but I'm sure I told you another down day was likely, and here it is. Now I think there's probably more likely than not more downside coming tomorrow based on the close today. It's always how they close them. It's not how they trade all day. In fact, they traded all day and closed them poorly. So they're really one and the same today. But certainly in terms of the close in particular, it was a very, very poor close. And what that means to me is that there's more downside coming. That means that they sold them into the close, which means they didn't want them into the morning. And it's pretty much that simple. So, yeah, sure, you can get some kind of an event, a news event. You can get a spike in the morning. Anything is possible. But what I'm saying is the probabilities now are for more downside tomorrow. And what does that really tell us? Well, what it tells us is we're most likely going to come into this 210.91 area, 209.91 tomorrow. And if we really have a bad day tomorrow, then you're going to come back down in this 209.18. And potentially by Friday, you may get back down to this double bottom. We'll have to see how it trades out. There's no way to tell for sure right now, but we have to take it one step at a time. But let's talk a little bit about the slightly larger picture and where that takes us beyond this week. More likely than not, beyond this week, we'll probably find a bottom, whether it's Friday or Monday. I have another daily cycle turn that's due on, it's actually due Monday. I had to look at my notes here. It's due Monday, and so what that means to me is that if we trade down into Friday/Monday, that would be a good indication that we should have a market turn. And if we're into one of these levels at that point in time, that's even more evidence that the market would support the turn and support those levels. So we'll have to see how it goes, and we'll have to see how the next couple of days trades out. But all in all, I'm not surprised to see the downside, only because it's just, we're in that window of we're going to start to get into the 4th of July weekend next week. And what happens there is you'll normally see a float into the 4th of July weekend. You have most likely some Greece event culminating over the weekend, of course. It's each and every day. I know I'm sick of it too, but it is what it is. And whether or not the market's trading on Greece, they keep talking about it, so everybody keeps talking about it. So it's almost like a self-fulfilling prophecy. It really burns me. It's been going on for 5 or 6 years, and we're still talking about Greece. And oh, by the way, today they tried to pin part of the sell-off on Carl Icahn because he said the market's overvalued or he's scared of it, whatever. Believe me, folks, the market's not trading because Carl Icahn said something. He's a smart investor, I get it, but at the end of the day, the market trades how it trades, not because one guy says it's overvalued. Okay, so, and by the way, you should start to look for, whether it's tomorrow or Friday, you should start to look for an appearance by either Warren Buffett or Jeremy Siegel in the morning, because they're usually the go-to guys when the market sells off, when they try and calm everybody down and tell you that you got to, buy the dips and we're going to see Dow, 90,000 and all that stuff. So those are the guys that in this point in time, they'll normally bring on within the next day or so. You should expect to see Warren Buffett or Jeremy Siegel on the box or on CNBC, and that's just the way it works. So that's pretty much it for the S&P. We can go over to the E-mini contract, but it's basically more of the same. Here's the hourly, the E-mini. The numbers are slightly different, but you can see here how this hour came right into the 2105, and then it bounced a little bit, and then it failed. We retested the 2105, and then we failed. And now we're really working our way down to the 2097. And then beyond that, we're going to have to start to look down further at 2090 and our infamous 2084, 2085 level, which is this green line here. That's a very, very extremely important number. So we'll see what the next day brings, the next 2 days. And we'll just, we'll keep letting you know what's going on. But I would not be surprised to see downward pressure on the market through tomorrow, maybe even Friday, and then I expect to see a turn next week if we're down into that period of time. Okay, let's move on to the oil market. No, let's talk about gold first. Gold's an interesting one. So look what we have here. Okay, last night I said we're going lower. We're probably going to pierce through 1170, and we did that. We got down to, 1168, 1168.10, and then we bounced up, and we went sideways the rest of the day. But guess what happened? We came to the underside of the 1174, which is this red line, and what happens at 1174 is it was support, okay, from over here, and now it's resistance over here. So the market needs to recapture 1174 if it wants to go higher. If it can't, then it's going to go lower. And I've got some calculations worked out, so just give me a second here and I'll get them. Gold, here we go. Beyond 1168, well, there's one that's not that far away. 1165 is another number. And if we can't hold 1168, around 1165, then there's a chance that we could trade all the way down to 1155. So basically, all told, I wouldn't be long the gold market right now. There's more. You just have to let the market tell you what to do. As long as we're below 1174, it's certainly in the bearish position. There's no two ways about it. There's nothing really else to discuss in the gold market. It's bearish. Okay, let's go to oil. Oil was whipped around today pretty good. Every time I looked at oil, it was doing something different. It was up, it was down, it was up, it was down. I mean, look at this. Let's look at the 10-minute chart just for kicks. Hold it. That's not it. There we go. So, you were down, you were up, and so, the oil market, believe it or not, this is actually a bullish setup here, but, where are my numbers? I want to go to the daily chart. Okay, so what we did today is, what was the high today? The high was 61.57. I said that we needed to close above 61.65 in order to maintain a bullish position going up to the top end of this channel. Well, that didn't happen. The market was repelled, and we essentially came into the 50-period moving average, which is 60.23, and right now we're trading at 60.25. So if we get below 59.30, and I redid some calculations, so let me double check to see if that number's, yeah, that number's still good. 59.30, below 59.30 at any point, you know, first hourly closes and then certainly a daily close, what that's going to do is that's going to promote really down to the bottom end of this channel, maybe not all the way, but certainly down to about, what was my number here, 57.5. So I'm going to put a line in at 57.5. That's just a mathematical calculation. It really doesn't have anything to do with the bottom end of the channel. It's just math. Don't read into it. It's very close to the bottom end of the channel anyway. But if we break below 59.30 and begin to close hourly below that, then you can bet your bottom dollar we're going to go down towards the bottom end of the channel, but likely would find some support at 57.50. Okay, so there's your oil picture. There's really not much else to discuss other than the fact that those numbers will work. They are working. Right now we're in between this channel here, which is these two purple lines. And like I said last night, until we get above or below, there's really nothing to do. So there's nothing else to talk about there. Bonds. TLT had a nice uptick today, and off this higher low now. This put in somewhat of a pivot, and we'll see if this holds. It's only one day, so one day certainly does not make a trend, but we did pivot off this low, a higher low. And what I have here is I have some calculations also worked out in the bond market, but I didn't do them on TLT. So I'll give you on the bond market, and then we'll try and translate them over to. Let's see if I have it on this chart. I don't think I have it on this chart, but I'll give it to you. Here, I'll put it on this chart just so we have a visual. We're going to look at 150, bear with me, 150.30. Yeah, 150.30, 150.30. And it looks a little different on the hourly chart. And what that looks like is my indication would be that bonds have a high probability of trading up to that level, you know, whether it's tomorrow or Friday or a combination of both. That is a high probability. So where does that level take us on the TLT? Well, it's hard to pinpoint without my calculator, but I would say that it would probably be 118, 118.50. So I'm going to put a 118.50 in there, and we'll say that we'll probably get into that level if we do trade higher in the bonds, and I think we will. There's a high probability we will. More likely than not, bonds will continue to trade higher. So if you're inclined and you want to take a trade in the TLT or the Treasury bond market, feel free. I think you can trade it certainly against yesterday's low. In fact, I'll give you a better number. 149.16. Okay, so you can trade it against, you know what, I don't want to guess because I didn't do the calculation in TLT. What we'll say is the bonds should trade higher to 118.50 between tomorrow and Friday, and we're going to leave it at that. I'm pretty sure that's going to take place. Okay, the dollar. Dollar pulled back slightly, and I'm going to go to the daily chart of the, yeah, this is the 60-minute. I'm going to go daily chart of the dollar. And, you know, we just put in a pause day. We traded slightly lower today, but that's not abnormal after you have a big up day like yesterday. So you may put in a couple of sideways days and then maybe trade higher, or you might just work back down. We'll have to see how that plays out. Right now, there's no trade in the dollar. There's no trade in the euro. But what I can tell you is that I still think there's lower prices coming in the dollar, and we'll just have to see how that takes hold. And I expect lower prices in the dollar. But for now, we're just in no man's land. We're underneath the moving averages, the 50 and the 20, although you did have the big update tomorrow. So if you put in 2, 3, 4 days of sideways consolidation here, you could make a move higher, and that would be expected. But the sideways consolidation can bring you all the way back down here, so it's not worth going long. There's no trade in the dollar right now. I'm just telling you what I'm seeing, and I don't even have probabilities one way or the other. All I can tell you is I think over the intermediate term, we see lower prices in the dollar. So where are we? We have the market. We talked about the bonds. We talked about gold. We talked about oil. By the way, let's take a look at back to the stock market. Let's take a look at the IWM, because remember what I showed you last night, this big uptrend, and you had a nice big down day today. This is called an engulfing candle, and you basically engulfed almost 3 days of upside. And while this market's still in an uptrend, that's certainly a warning sign that there's more downside to come. Where you will find support if you get all the way down here, you'll find support at this trend line, and that would be a good buying opportunity. And if that coincided with Friday, Monday time frame, where I have a cycle turn, a short-term cycle turn, that would be definitely a buy area, certainly into the 4th of July holiday, where you'll normally see the market float higher, not lower, and that's just the way it works. So all in all, and the stocks, stocks sold off today. Everything was taken out behind the woodshed for the most part. So what you have to do is you just have to take today as a down day. You're probably going to see more downward pressure tomorrow. But as we get into the end of the week and beginning of next week, we may begin to see finally the last leg higher in this market before we see any significant rollover leading into later this summer. So we'll talk about that more as time goes on. But right now, I'm going to leave it there tonight. That should give you a good indication of where we are. And I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.